The revenue beat is modest, but nevertheless, a revenue beat. We'll have to go a full-year compensation, Brad Hintz, 36.8% full-year compensation ratio. This is by far the clearest headlines.
It is. Thank you, Lloyd Blankfein. I appreciate you for making my Friday easier. Goldman Sachs, fourth quarter earnings per share of $4.38. That is slightly better than consensus estimates for $4.36. Tom, we have seen disappointment and matches from nearly all the big banks on Wall Street. This is a very different story than what we saw from J.P. Morgan. Obviously, the big concern was we were going to see this enormous slowdown in trading and maybe even some more costs, but it looks like Goldman Sachs has really bucked the trend. In particular, without looking through the details, I would bet a lot of this strength is coming out of their IPO and in their advisory business. Yeah,
it's a nice beat, and there's a number of people headlining that. Brad Hintz with NYU and formerly with Sanford Bernstein, the FIC, the fixed income currency commodity. We forget how big Goldman is, $15.2 billion. Is a very nice number. What does it signal that the others struggle and that Goldman, pure trading, does a beat? I mean, does that simply mean they're more efficient, more focused, and more risk-oriented than the other banks?
In terms of fixed income, remember they have a large commodities business. We'll have to hear the commentary
on
that.
Course.
You know, did they do well in terms of that? In terms of the mixes of the businesses and relative to the banks, Goldman's going to be somewhat smaller in foreign exchange. The banks are going to be larger.
You're sitting at NYU next to the legendary Roy Smith, who's pretty good and had a storied history at Goldman Sachs. Would Professor Smith recognize today's Goldman Sachs?
Well, Goldman Sachs is clearly much more of a trading house than it was when Roy was there. What we're seeing now, though, is we're seeing a shift back in the other direction, right? You know, it is the investment banking businesses that are doing so
well. To that point, Alan Patricof, how do you dovetail with Goldman Sachs and venture capital?
Very little.
Are they a competitor, or do they help you? Are they your frenemy?
No. They're I call them a frenemy. Goldman Sachs has a private equity investing group, and that private equity investing group, which I'm not sure is off the balance sheet, I think it may be client.
Depends on their mood.
No,
Olivia, what else do you see?
Frank, they're not allowed to do it. So they are a player, as is Fidelity and Wellington and T. Rowe Price. They're all in those big deals, which you're reading about in the paper, that at the $1 billion, $2 billion.
Almost pension equivalent deals.
But they want to put big blocks of money.
Yeah, okay. Olivia, what else do you see?
One other thing that jumps out at me is the fourth quarter return on equity, 11.1%. That is a pickup in ROE. It puts it second behind Wells Fargo, which is the most profitable bank. But I mean, that's pretty interesting. That's sort of the similar IRR that you're looking at over at Greycroft.
More than that, I hope.
And Brad Hintz, here's a headline that's important. Total staff increased 3% during 2014. Everybody's talking about cost cutting, but you still need the brains to make the place go.
Well, that's very true. Recognize, though, Goldman has been a leader in terms of moving its high-cost operations out of New York
to Utah,
to lower-cost locations, right? So you're seeing Dallas, you're seeing Utah, you're seeing India, right? This, you know, that's a way of bringing your expenses down. Your headcount isn't changing.
Okay, Brad Hintz with us. The headline here is certainly Goldman doing a bit better than the others.